Right, well, let's start with some breaking news. The Fed out with their monetary policy report. With us, Yahoo Finance's Jennifer Schonberger. Jennifer, what's the latest?
Rochelle, the Federal Reserve out with its monetary policy report to Congress ahead of Fed Chair Powell's testimony on this report to the Senate and the House next week. The report underscores that inflation, while down from the middle of what we saw levels last year, still remains too high, and that ongoing increases in interest rates are required to bring inflation back down to the Fed's 2% target. Now, this will likely require a period of below-trend growth and softening in the job market. The report also noted that market functioning remains orderly, but that market liquidity in several markets, notably the Treasury market, remains low when compared to pre-pandemic levels. The Fed said that it is prepared to adjust the unwinding of its balance sheet if needed, if there are changes in the economic and financial conditions. Now, the Fed also noted that financial conditions have tightened significantly since last June, but that valuations in the stock market remained notable and ticked up on net as stock prices increased modestly even as earnings expectations dropped. Now, Rochelle, separately this week, we received notable Fed speak. Atlanta Fed President Raphael Bostic said there is the case that could be made that the Fed will need to raise rates higher. He said consumer spending is strong and labor markets remain quite tight, and those suggest that the economy's strength could be a bit more than people think, which means we might need to do more. These comments suggest there may be room for upside to Bostic's belief that the Fed needs to raise the policy rate by 50 basis points to a range of 5 to 5.25%. He also said he favors holding rates at that level until well into 2024. Now, we also heard from voting member Minneapolis Fed President Neel Kashkari, who said that he's open-minded about whether to raise by 25 or 50 basis points at the next policy meeting. Kashkari says he'd lean towards continuing to raise rates further than the 5.4% he projected back in December. Now, next week, all eyes will be on Fed Chair Powell when he delivers his testimony to the Senate on Tuesday, followed by the House on Wednesday. Back to you.
And Jennifer, turning back, of course, to Raphael Bostic, I've noticed that he continues to make headlines despite not being a voting member this time. Can you explain why?
Well, President Bostic is going to be a voting member in 2024, and he is still part of the FOMC. And he is a voice that people listen to because he's in there, right? He's got his eyes on what he thinks monetary policy should be, and he's pretty direct in expressing his views. I think also the fact that he's been perhaps more a little middle of the road, and now, based on comments this week, becoming a bit more hawkish. That's caught a lot of people's attention that perhaps other members within the Fed are also leaning in that direction. And we've heard comments of that ilk from other members as well, suggesting that perhaps the median outlook for the peak level on the Fed funds rate of 5 to 5.25, which is Bostic's baseline, has some upside to it, as he himself had suggested.
Certainly, we've been hearing more focus on Bostic, as he does seem to be making some of these projections more correctly, or at least giving us a little bit more insight ahead of some of these FOMC decisions. Jennifer Schonberger, thank you so much.